Markets set to crash this morning as inflation spooks investors. That's coming up on today's 3 Minutes on Markets and Money. This morning, futures are pointing sharply lower. Dow currently down about 580 points now. That's as of this morning pre-market. That's going to change here as we get close to market open. But the issue here is that inflation print on Friday, hotter than expected. That's now worrying markets that the Fed may be even more aggressive on their rate hikes. That may or may not be the case. The Fed set to announce their latest rate hike change this Wednesday. So markets trading off ahead of that meeting, of course. The question is whether or not the Fed will be more aggressive. I tend to suspect that they're going to maintain their 50 basis point rate hike for this meeting. The question will be will their commentary be of more aggressive rate hikes over the next several meetings going forward into the year? That's going to be the one thing weighing on markets. Of course, we also have the $3.2 trillion options expiration on Friday, so expect a lot of volatility this week. The bad news this morning is markets are going to open sharply lower, and we're going to be trading 2 standard deviations below the 50-day moving average. Now, that's back to where markets typically try to find at least a short-term bottom. We'll see if that's the case. But even if we do open lower this morning, we are going to trigger a MACD sell signal. That's unfortunate because we just got that buy signal just a couple of weeks ago, got this bit of a rally. That rally is now over, at least for the time being. We talked about using this rally to reduce risk and rebalance portfolios. We talked about doing that last week. We did add a short position and raise some more cash. This is going to be another opportunity here if we get a bounce at all over the next day or so, particularly in the case where we are now triggering sell signals on multiple levels and we're not deeply oversold yet. That suggests that you need to be using any intraday rallies to lift some more exposure, raise some cash, potentially add a short to the portfolio, etc. Because there's real risk here if we break these lows, which we will likely do today, that there is more downside, at least in the near term. Again, a lot of this is going to depend on what the Fed does on Wednesday. Options expiration on Friday. Once we get past that, we get a little bit of breathing room in the markets, and then we can begin to start thinking about what markets might be doing next. But right now, this is all hands on deck. Protect your portfolio at the moment until we find out where we are after this week. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.